The roller coaster ride, why emotions dominate investing. Welcome to the modern financial arena. Look at your screen on any given Tuesday and you're met with a barrage of contradictions. On one side of the split screen, there's the euphoric AI boom, a gold rush fueled by promises of limitless productivity and soaring valuations for tech giants. On the other, the grim fear of recession, whispers of inverted yield curves, stubborn inflation, and cooling job markets. This is the roller coaster ride of modern investing. It isn't just about numbers or spreadsheets, it's about the chemical surge in your brain. When Nvidia or Microsoft jump 5% in a day, your brain releases dopamine. You feel the fear of missing out, FOMO. You think, if I don't buy now, I'm being left behind while everyone else gets rich. Then the tide turns. A bad CPI report or a geopolitical tremor hits. The screen turns red. Now dopamine is replaced by cortisol. Panic selling begins. Your lizard brain screams flight to protect what's left of your tribe's resources. But what is the true psychological cost of this volatility? It's not just the realized losses on your brokerage statement. It's the loss of peace of mind. It's the dinner conversation you missed because you were checking the Nikkei 225 at 2 a.m. Emotional decisions are the primary reason why individual investors consistently underperform the very indexes they buy. By chasing the highs and fleeing the lows, we sabotage our long-term financial goals and replace our well-being with perpetual anxiety. We are, quite literally, our own worst enemies.
Ancient wisdom, modern markets. What Stoicism offers. If the market is a storm, how do we find a lighthouse? The answer lies in a 2,000-year-old philosophy, Stoicism. Contrary to popular belief, being a Stoic isn't about being an unfeeling robot. It's not about suppressing your emotions until you're numb. Instead, Stoicism is the art of controlling your reactions to external events. The Stoics understood that while we cannot control the weather, the government, or the stock market, we have absolute sovereignty over our own judgment and actions. The philosopher Epictetus famously taught the dichotomy of control. In the context of investing, this is a superpower. What you cannot control, interest rate hikes, a sudden market crash, what Elon Musk tweets, or the irrational exuberance of the masses. What you can control, your asset allocation, your savings rate, the amount of research you do, and, most importantly, how you react when the market drops 20%. Applying Stoic principles means developing a mindset of objective analysis. When the market noise gets too loud, a Stoic investor steps back and asks, is this event within my control? No. Is my long-term thesis still valid? Yes. This resilience allows you to remain standing when others are swept away by the current of hysteria.
Practical Stoic strategies for investors. So how do we turn philosophy into a practical toolkit? Let's look at 3 specific Stoic exercises designed to bulletproof your portfolio. 1. The premeditation of evils, or premeditatio malorum. Most investors only imagine the moon scenario, what they'll buy when their stocks triple. A Stoic does the opposite. You must perform a scenario planning for the worst case. Imagine your portfolio drops 50% tomorrow. Your favorite company goes bankrupt. The economy enters a decade-long stagnation. By mentally rehearsing these evils now, you strip them of their power to shock you later. You won't panic because you've already survived the crash in your mind. 2. Negative visualization. This is the practice of periodically contemplating the loss of what we value. In investing, it means acknowledging that volatility is the price of admission for long-term returns.
If you cannot visualize your portfolio in the red without losing your temper or your sleep, you are over-leveraged or overexposed. Negative visualization helps you find your sleep well at night threshold. 3. The internal locus of control. In the market, we are often obsessed with outcomes, the price of the stock, but a Stoic focuses on the process. You should judge your success not by whether the stock went up today, but by whether you followed your investment thesis and stayed disciplined. If you bought a sound company for the right reasons and the market crashed, you didn't fail. You executed a good process in an unpredictable world.
Building your Stoic investment framework. To be a Stoic investor, you need a framework that removes your human element during times of crisis. You need to build a system that protects you from yourself. First, craft a rules-based investment plan. Don't wait for a crash to decide what to do. Write down your if-then statements while you are calm. If the S&P 500 drops 10%, I will rebalance by moving 5% from bonds to equities. By making the decision beforehand, you remove the emotional burden when the pressure is on. Second, maintain a virtuous portfolio. In Stoicism, virtue is the highest good. In investing, this means alignment. Does your portfolio align with your long-term goals and personal values, or is it a collection of speculative bets you saw on a Reddit forum? A virtuous portfolio is built on patience and utility, not short-term greed. It is a tool for your freedom, not a scorecard for your ego. Third, practice mindful market observation. Detaching from daily fluctuations is essential. The ticker tape is designed to be addictive. It's financial entertainment, not information. A Stoic investor views the market with profound indifference to daily noise, focusing instead on the big picture, the multi-decade compounding of human progress and corporate earnings.
The Unshakeable Investor, Long-Term Growth and Inner Peace. What is the ultimate payoff of this approach? Yes, there is the financial reward. History shows that those who can sit still while others are running usually capture the highest returns. By avoiding the emotional tax of buying high and selling low, you allow the power of compounding to work its magic over decades. But the real reward goes beyond profits. It is the inner peace that comes from knowing you are no longer a slave to the green and red flashing lights on your phone. It is the mental freedom to focus on your family, your career, and your passions, confident that your financial house is built on a foundation of reason, not emotion. The Stoic approach transforms you into an unshakable investor. You become the person who is calm when others are frantic and cautious when others are reckless. So, here is your actionable next step for this week. Identify one uncontrollable factor in your portfolio that has been causing you stress. Is it the Fed? Is it a specific tech stock? Once you've identified it, consciously decide to stop tracking it daily. Instead, write down one thing you can control, like your monthly contribution amount or your diversification strategy, and focus your energy there. Transform your financial journey today, not by working harder or finding a hot tip, but by mastering the one thing that truly determines your success, yourself.